Stop for a moment and imagine this. Every dollar in your wallet, every number glowing on your bank app, every loan, mortgage, and credit card balance, all of it is built on a single, invisible invention. An invention so powerful it has redefined wealth, controlled nations, and quietly enslaved billions without a single chain in sight. That invention is debt. For centuries, we've been told that debt is a burden, something to fear, something that ruins lives. But what if I told you that debt is actually the world's most successful product? That the very system we rely on to live, trade, and survive was designed to profit from your borrowing, not your success. This is the untold story of how debt, once a desperate promise between two people, became the engine that powers global wealth. And how the same system now stands on the edge of collapse. The origin, when borrowing was survival. To understand how we got here, we have to go back thousands of years to ancient Mesopotamia. In those early markets, debt wasn't an industry, it was a lifeline. Farmers borrowed grain during bad harvests, promising to repay when the rains returned. Temples and rulers acted as both lenders and enforcers, keeping a fragile balance between survival and ruin. Debt back then was personal, human. If you couldn't pay, you didn't just lose your home, you could lose your freedom. Debt slavery was common, and the entire system ran on trust and punishment. But as civilizations grew, something began to change. Rulers realized that debt wasn't just a promise, it was power. Kings and empires started borrowing not from people, but from the future. Armies were funded, palaces built, wars fought, all with money that didn't yet exist. The seed was planted, the idea that debt could be manufactured, not just owed. It's the birth of modern debt from kings to banks. Fast forward to medieval Europe. Gold and silver coins ruled the economy, and money was tangible. You could hold it. But merchants and monarchs had a problem. Wars, trade, and expansion needed far more money than they had. So they turned to private lenders, the early bankers. Then, in 1694, a revolutionary idea changed everything: the creation of the Bank of England. For the first time in history, a central bank was allowed to lend money to the government, not from existing reserves, but by creating it out of nothing. The government issued bonds, the bank printed money, and the public paid interest on both. That cycle, borrowing, printing, taxing, became the foundation of the modern financial system. From that moment on, debt wasn't just a transaction, it became a business model. Banks discovered that for every loan they issued, they could charge interest, and with the magic of fractional reserve banking, they could lend far more than they actually possessed. $1 could become 10, 10 could become 100. And all of it was created through debt. The rise debt becomes a product by the 20th century. Debt had evolved into something entirely new, a consumer product. Governments encouraged citizens to borrow. Banks introduced credit cards in the 1950s. Mortgages became accessible. Education, cars, even vacations, all could be financed through loans. Debt was no longer a shameful secret. It became normal, even patriotic. Politicians claimed that consumer debt fueled growth, that spending meant progress. And behind the scenes, financial institutions realized something extraordinary. The more people borrowed, the richer they became. Debt was no longer just a financial tool, it was a commodity to sell. Then came the ultimate innovation: securitization. Banks began packaging debts, mortgages, student loans, credit cards, and selling them as investments. The more people borrowed, the more assets banks could sell. Debt had officially become the world's most profitable export. The breaking point when debt devoured itself, but all empires of profit have limits. In 2008, the illusion cracked. The global financial system, built on layers of complex debt, collapsed. Banks had lent trillions to people who could never pay it back. The safe investments turned toxic overnight. Millions lost their homes, jobs, and savings. And yet, the system didn't die. Governments stepped in and bailed out the very institutions that caused the collapse. New debt was created to pay for old debt. Central banks lowered interest rates, printed money, and kept the cycle alive. Debt didn't just survive, it multiplied. Today, global debt stands at over $300 trillion, a number so large it defies imagination. Every second, The world borrows more than it repays. The system can't stop, because if it did, everything would freeze. We live in a world where economic growth depends on perpetual borrowing, a global machine that feeds on promises. The fallout, the debt economy we live in. So what happens when debt becomes the foundation of everything? Governments borrow to stay in power. Corporations borrow to buy their own stocks. Consumers borrow to maintain lifestyles they can't afford. And central banks, the supposed guardians of stability, now exist to keep the borrowing cycle alive. Interest rates go down, asset prices go up. The rich grow richer because they own the debt. Poor get poorer because they owe it. Debt is no longer just a financial tool, it's a system of control. Because when everything runs on borrowed money, the borrower becomes dependent. And dependency means power for those who issue the credit, not those who use it. It's not an accident, it's design. Modern parallels, history repeats itself. If you think this system is new, think again. History has seen this movie before. Ancient Rome collapsed under its own debts. The French Revolution was sparked by an insolvent monarchy. The Great Depression began when credit expansion hit its limit. Today, the same story repeats, only on a digital scale. Instead of coins or paper, we now create trillions in digital money with a few keystrokes. The same mechanism, central banks, interest, promises, just faster, bigger, and more dangerous. Data shows that in the last 40 years, global debt has grown 5 times faster than global income. We've built an economy not on productivity, but on promises to pay later. The machine keeps running because if it stops, the illusion of wealth collapses. The warning and the takeaways. So, what does this all mean for us? The ordinary people living inside this invisible empire of debt? Takeaway 1. The modern economy, ISNT, powered by money, it is powered by debt creation. Every dollar borrowed is someone else's profit. Takeaway 2. The financial system depends on your participation. The moment people stop borrowing, the system begins to crumble. Takeaway 3. Real wealth isn't in what you owe. It's in what you own. Knowledge, skills, independence, the things no banker can repossess. But here's the warning. Every empire built on illusion eventually meets reality. History shows us that when debt outgrows the ability to repay, collapse follows. The only question left is who pays the price when the illusion ends. Dramatic silence, low background, hum, the world calls it progress. I call it the perfect trap. If you found this eye-opening, subscribe to The Financial History because the next episode will reveal how money itself became an illusion. And trust me, you'll never look at your bank account the same way again.